The Federal Reserve is wrapping up its latest policy meeting this week. Investors are really wondering what's going to be on the table going forward. At this point, it really looks like the tapering of the third round of quantitative easing, this bond buying stimulus the Federal Reserve has been conducting since late 2012. That looks like it's going to continue, and the program is going to be fully tapered and ended sometime later this year. The big question going forward then is what's going to happen with short-term interest rates. With new Federal Reserve Chairman Janet Yellen, the focus has really been on, is that first rate hike going to come in early 2015 or is it going to come in late 2015? Initially there was some turmoil with her first press conference when she indicated that rate hike could come in early 2015. Comments subsequent to that have tried to push that back a little bit with a focus on areas of the labor market that suggest there's still some weakness there. Measures such as the number of people who are long-term unemployed, or labor force participation rate, or the lack of wage inflation, for instance. That dynamic could be affected by some of the inflationary pressures we're starting to see, particularly in food prices. If you're looking at consumer prices, if you're looking at producer prices, which is the prices business are paying to producers, you're actually seeing some evidence of broad-based price pressures. So, for instance, services prices are actually increasing nearly 1% month over month. Overall, producer price inflation is actually rising at the fastest rate since early 2011. So if the Fed acknowledges that there is some price pressures building, investors could interpret that as potentially moving forward that first short-term interest rate hike into the early part of 2015 again, and that could result in some market turmoil. So going forward, really watching for any acknowledgement of inflationary pressures increasing, and then watching to see how both stocks and the bond market will respond to that.